Hello everyone, I am Lady Maria Alumundang and I am the first reporter of Chapter 9, Building the Financial Life Scorecard. So in this chapter, selecting the right measures, finding the best financial fit to your business, and leveraging opportunities to build the scorecard. So next is the financial measurement chapter, where the rubber meets the road, as they say. So where the rubber meets the road means parang baguhan or nag-uumpisa pa lang sa isang business, tapos hindi pa sure kung magbo-boom ba talaga. And then, they try to put some effort to resolving the business to become increase their sales. So, in this chapter, we're going to go out and guess that you're probably looking for the reasons. Your company is doing okay, but just not making the number as well as think it should. Next is your department can make the budget this year and you are thinking maybe there's something to do with the formulas or the way things are calculated. Sales this year are doing great, but your margin is eroding and you are looking for some way to explain why this is happening. Next is be ready to have many of your beliefs about financial measures shattered and some of your assumptions proven incorrect. Next is, even as we'll provide many examples of financial measurements for sound balanced scorecards, it is highly advisable not to take them verbatim but use them instead of framework for customizing your own scorecards and dashboard. Next is, sorry, but this chapter will not make you financial expert, not to relatively small amount of money you paid for this book. So next is key aspect of financial measurement. So in this aspect, we have a focusing in the right things, which is the strategic growth goals of the company, good environmental and community citizenship, value-added focus for all stakeholders. Next is the industry recognition for expertise in your industry, providing the best value in your industry in the world, and being an ethical company. So one key aspect of focuses is need to communicate effectively. So whatever your position or level or role in the organization, you will need to share and communicate your sense and your purpose of your organization. Next is the WIIFM, or what it is for me, station everyone tones into what is it for me. So one thing we always hear in organization, how would you answer this question? First is, we need to understand the role in the organization and what the responsibilities are managing operation or department. Most also agree that the financial metric is doing good. I manage my department budget and I am responsible for making the number. So next is the balance scorecard, and particularly its financial measurement can provide such real-time reading for the pulse and heartbeat of an organization. Therefore, we only have to show that the current management system and structure are designed to see problems and mistakes after they happen, building in error and ways to our business model to help middle and upper manager to see that they will need a better way. So these 4 legs of balance scorecard, which is the internal process, finance, learning and growth, and the customer. These four aspects, it can give better when it comes to an operation management or the business. So kung wala ang 4 na ito, your scorecard cannot be balanced. So lastly, timeless is your competitive edge. So a good technique we have used in the past is to compare the update rate of your financial information with your ability to affect change. You will not notice that where updates are monthly, you cannot affect change any faster than that. If you want to be able to adjust performance faster, say on weekly basis, and you will need to go after the financial measure that can be provided at least weekly. So when it comes in work or in business, you need to update any time to time. That's all. Thank you.
Next is timeliness is your competitive edge. What is timeliness of accounting information? It refers to the provision of information to users quickly enough for them to take action. The timeliness concept is of particular importance in four areas of a business, and those are timeliness of financial statement, timeliness of variance analysis, timeliness of responsibility reporting, and timeliness of regulatory reporting. For me, being timeliness in your company is a great thing to beat your competitors, and it can also boost self-confidence. When the person has timeliness in himself, he or she is not ashamed to look at his boss or co-worker when they meet. They may also respect you because you show good performance for the company and them. And if you have timeliness in yourself, the result of running the company will be good and only a few problems will face in the end. For example, in financial reports, when you make weekly reports, you can immediately know what news about the management of your company, and you can immediately compare it with the first financial report. Also, you can monitor it. But when you make a monthly report, you may not be able to manage or notice that the management is not good. So, it is better to make a financial report early to solve the problem immediately while it is not getting worse. Next is financial measures that matters. Standard financial measures means EBITDA and other objective measures of the company, financial and operational performance used by the company to evaluate the company's performance over the performance cycle. The financial measure includes what we call sales, expenses, costs, and profits. Through this, you can see if your company is healthy and making money by looking at the sales, or also known as revenue. So, we have a key question help you see what to measure. When we set up our own business, we don't expect to have questions like, aren't we going to lose money in the end? Do you think this business will be successful one day? And etc. These questions cannot simply be answered by simply tracking the revenue, cost, profit of business. So, explore some of these questions and briefly provide some hints to help you select the best measures to help you run our business well. In the product or service questions, relate the value your company provides to customers. Some of the key questions might be, what is the product or service your business will provide? Means help to decide how the product or service is to be measured. To whom would you provide your products or services? It means helps identify customers and market targets, and how to customer successful current and future penetration. Third is, why should customers select your product or service over someone else? Defines what is special about your products and service, and helps to determine how to measure these in terms of financial gain and long-term benefits. Next is the strategy questions. How long will you want the company to run? Will you keep it or sell it after 5 years? Define the approach, personal investment, and your ultimate long-term objectives. Lastly is, as the company matures, how will you evaluate and adjust case strategies and actions? Refine focus and align resources. Tells how you will manage your business or department. This is a key aspect to selecting the right financial measurements of your scorecard. Next is resource financing and deployment questions. How will you finance your business, both initially and ongoing, public or private? For department managers, how will your budget be decided? Define how you are starting up, as well as financials regarding sustaining your business or department. How will you staff your company, particularly its key positions? Helps realize specific methods to manage resource cost allocations. For the long-term planning questions, first question is, when will I need to expand To keep up with demand, how will I know? How can I invest with confidence in a good return? What happens if I make a mistake? Help defines the type of financial measurement needed to track the expansion and make good investment decisions. For the last question, how do I keep up with ensure flexibility with changing market, customer, environmental, regional conditions? Links directly with the growth and development lane of the balance scorecard. Helps define how to detect, analyze, and decide actions related to changes. These are some questions that we must answer that will help in managing the business. Besides that, we will need to define specific performance indicators, which is the KPI.
Hello, I am Lester. Let us now proceed to selecting your key performance or your KPI. There are many options to selecting financial measurements depending on whether you are growing your business or just sustaining the performance of your business. Because growing your business and sustaining the performance of your business are different things. With the words themselves, growing your business means you are trying to make your business bigger and wider endlessly if possible. While sustaining the performance of your business means you are not open to new ideas or innovations, but you are trying to maintain the operations in your business as it is from the beginning. Now, if you are trying to sustain the performance of your business, you should focus on the measures that track cost reductions, budget compliance, product profitability, and performance against competitors. While if you are trying to grow your business, you should try to focus on long-term aspects like market share acquisition trends, profitability of new products, revenue or sales growth trends, investment and training percentages, and revenues proportion from new products and services. Of course, if you are trying to focus on sustaining current business while developing new markets, your measures will be some combination of all of these. Now, here are the tips for finding your key measures. If we go back to the last topic, key questions help you see what to measure, which was reported by the previous reporter. Those are the questions that you are going to use as your guide in order for you to find your key measures. Answering key strategy and product or service questions about your business, such as what value you are offering, to whom, and what advantage they provide will then enable you to select financial measures such as actual value created for customers, possible financial advantage over competitors, and a comparison of your product or service value with other alternatives. Percent of available market share in terms of sales, margin, growth opportunity, and current and future demand. Total customer product or service lifecycle costs, support systems investments, and performance as profit centers to supporting these costs and current margins generated. Measures to assess market and business environment changes to enable adjustments to your balance scorecard financial measures as appropriate. Answering resourcing, financing, and deployment questions will enable you to select financial measures to help you track and manage how you execute your business processes and enable you to adjust in real time to changes in demand, supply, investment capital, and strategy. Estimates of the point of diminishing returns on this product or service line and when we can expect the follow-on line to take over. Financing your business and where it comes from, especially current budgets for your product or service families and investments in new products. Staffing, in terms of function and key positions and utilization as well, not just per employee but specifically for the different functional specialties that define your competitive advantage. And deployment and financial performance by organization, geography, product family, and customer mix. It is critical to know where the overall company is going, whether it be sustaining or growing, or driving straight for the ditch, because it is common and obvious that if you don't know the pathing of your business, especially financially, that business will fall for sure. How measures differ? Depending on your position within a company, these measures will be different. Let's see how that might work out. For executives and senior managers, strategic focus will influence you to define financial KPIs for the overall organization, totaling revenue, costs, expenses, interest, taxes, apportionment, depreciation, stock value, and free cash, and others as you might find on a profit and loss statement or a balance sheet. For middle and lower managers, operational focus will influence you to define your financial KPIs at a much more budget and process level. Lastly, for line managers, tactical focus will influence you to look to very specific financial measures related to your daily, weekly, or monthly goals and objectives. Ensuring the competitive success by revisiting measurement. With a scorecard and real-time dashboard, you will be able to know specifically what the reason was for this increase and be able to take quick action to keep your company competitive. By having an active balance scorecard, You will be able to detect changes in your competitors' behavior, understand these changes, and adjust them toward actions to both react quickly to avoid loss in your business operations and ensure that the scorecard measures are still valid. That will be all for the Group 9. Thank you very much.